Welcome to BetterBooks with Kathy Houston. This is our equity section where we will discuss shareholder contributions, shareholder distributions, retained earnings, and net income. Shareholder contributions reflects any money or assets that the shareholders have added or contributed to the business. This could be in the form of cash, vehicles, equipment, etc. Shareholder contributions should only be used for assets that will stay in the business. Do not use this account for money going in and out constantly between the business bank account and your personal bank account. You will use shareholder distributions for those transactions. The shareholder distribution account reflects any money or assets taken out of the company. Most businesses use this account as their yearly distribution account for net income purposes. An example, your net income amount for the year is $50,000 and you've distributed $45,000 in cash to yourself. This could also include any payments made through the business that were personal. Your distribution amount cannot be more than your net income for the year unless you have retained earnings. So I'm going to jump on my soapbox here for a minute to discuss two big mistakes that small businesses make. The number one mistake that small businesses make is commingling funds between their personal and business account. This means paying for personal expenses out of your business account. This is a huge no-no. There is nothing wrong with writing a check to yourself and or transferring funds from the business to your personal account, but you should not use company funds to pay for personal expenses directly. This is a sloppy and quite lazy practice, and you will never grow your business this way. You are increasing the transactions that are flowing through your business, thus increasing the time to code and or expense to pay someone else to code. If you get audited and the auditor sees that you're commingling, they're going to scrutinize your transactions in much more detail and deny any expenses that are questionable. Some auditors will accept your bank statement, debit charges, and copies of checks as backup to the expense. But if they think that you're paying for personal expenses through the business, they're going to require that you show the receipt detail of that purchase. The number two biggest mistake that small businesses make is not knowing when to transition from a sole proprietor to an S election. We will discuss this topic in the advanced training session. Congratulations on making it this far. You've almost completed the BetterBooks basic training. The next section will discuss retained earnings and the net income portion of the equity section of the balance sheet.